Hello, this is Jim Smith from GannAnalysis.net. This is the website, GannAnalysis.net. Register, you get a few free reports. And just remember, if you like this video, give us a like, subscribe to the channel, and hit notify. It helps. So what we're talking about today is Starbucks. Now, if for those of you who like classic patterns, you'll recognize right away you got a left shoulder, a head, a right shoulder, or if you want a two-headed monster, then maybe this is the right shoulder here. In either case, what I've done is I've taken the high to high, that same slope, moved it down here and made that the neckline, which seems to work pretty well because, 3-4 months in a row, it seems to be finding support on that level. Now, when this neckline breaks, the idea is that you take a measured move. This thing here, if we just copy it and move it over to this point here, this is what we get. We get a measured move down to a target of around $16, somewhere in that area. So the point, we don't have to be that precise, but just copying this over to this point, the area where we think it's going to break the neckline, that gives us a target at $16. When are you going to get there? We think will probably be in March, April, because you have a 120-month cycle. That's a 10-year cycle. 60-month cycle is 5 years. 45-month cycle, 45 is a big Gann number. So down from high in 45 months would take you to April of 2025. So that would be a nice target. And just for your interest here, from the low to this high here was 180 months or 15 years. So that was another reason why it started to sell off. I think you're going to go down. Why are you going to go down? Well, let's diverge into fundamentals. What do we have with Starbucks? We have burnt coffee. We have your type 2 diabetes fix. If you're into sugar, there's a point at which sugar will not dissolve in your coffee. And I think Starbucks has figured out how to get it right close to that level where it's almost pure sugar, so saturated that if you put any more in, it wouldn't dissolve. So I don't like their coffee because it's burnt. Also because too much sugar, all those sugar drinks loaded with sugar. I don't like the slow service. I don't like the fact that it's overpriced. And if you look at coffee futures, you'll see that coffee, if you were to subscribe to our service, you'd see our coffee report shows that coffee prices are headed higher. The futures look really strong. That's not good for Starbucks because their basic input is coffee. And if coffee goes up, they're not going to make as much money unless they raise prices. Well, they're already charging $5, $6, $7, $8 for a cup of coffee. How are they going to raise prices even if coffee doubles? If futures double, how are they going to raise prices? Who's going to pay $10 for a cup of coffee? Maybe I'm wrong about that, but I doubt it. Also, I don't think fixing their app is going to help. That's the solution the new CEO is supposed to bring to the company. I think that's just BS. It doesn't help if you have a great app and you still have burnt coffee, sugar drinks, slow service, and you're overpriced. It's just not going to work. So I think the problem they have is that in 1971, they were some of the best coffee you could get in America. Now, they're some of the worst coffee you can get because mom and pop figured out how to make good coffee. They roast the beans on site and they provide there are a lot of mom and pop coffee shops that provide much better coffee than you can get at Starbucks. So I think it's the little guy that's eating the lunch of the big guy. I don't see how Starbucks can compete. It's crazy. I think if I were to open a coffee shop, I would not serve any sugary drinks. I would buy the best possible beans, roast them on site, and just provide really quick service. All you can get is coffee. You can't get every kind of flavor in the world. You just get straight coffee. You don't like that? Go to Starbucks. because I think there are a lot of people who really like coffee, and there are some people who just really want sugar. And for those people, they should go to Starbucks. But you're going to wait like a half hour because the lady in front of you wants to have 4 kinds of fruit flavors and whatever in her drink. It's more of a cocktail than a coffee. And that's going to slow down the service. They're never going to have fast service because they make their money off sugar. All those fruity, weird concoctions they make, that's where they make the money. And so therefore, anyone who just wants a cup of coffee, sorry, you're going to have to wait 30 minutes to get your coffee. It's stupid. And it's overpriced. I just don't buy it. And I would never go to, unless I'm in, there's no place else to go, I would never go to Starbucks. And I think that's what's happening with most people. They've stopped going to Starbucks because they know in their local area there's much better coffee they can get. So I think that explains why this thing is going to get crushed. I think when you break the neckline, you're going down here to 16. Maybe I'm wrong. Maybe it goes down to 7, retesting the November 2008 low. It's possible because, this thing is in bad shape. And when it breaks that neckline, it's gone. It's just physically gone. Now, I'm not telling you to buy or sell Starbucks. I'm telling you what the Head and Shoulders pattern would suggest. For all I know, I could be totally wrong about all this. Maybe everybody loves Starbucks and the new CEO is going to maybe turn things around. And this price action here shows that some traders believe he's going to turn it around. So this is a big move up. And if it keeps going up, hey, maybe it goes up into March of next year. That would be from this high here in 2015. This is 60 months. This is another 60, so that's 120 months. Maybe it rallies into high. I would not say that's impossible. I think it's very unlikely. But hey, I've been wrong before. I could be wrong again. If he turns it around, maybe it rallies into new highs. But if you see it break below the neckline, then all I'm saying is the Head and Shoulders pattern would imply a move down to $16. And it may get there in sync with the 120, 60, and 45-month cycles due next spring, March, April timeframe. So that's how I would analyze this. And if you were to look at it and say, hey, why should I be so bearish on Starbucks? Well, another reason, if you look at the Gann chart, if you draw a 1-by-1 line up from low, you can see how it catches these lows here. We're using a scale price unit of 0.5 points per month. So that's a half point per month. This line moves up at a rate of a half point per month. It's catching nice lows. And here, I think it's catching a high. 96.56 is that level. Let me just make that a little bigger so you can see it. That's the 45-degree line at 96.56. And it's also pretty close to a Gann division. Gann believed you could divide any swing into 8 equal increments. So you have 1, 2, 3, 4, 5, 6, 7, 8. If you're counting down from high, this would be 1/8. This would be your 2/8 retracement, which is also close to this former high. And the 1-by-1 coming up from low. So, hey, right in this area, 95.75 to 96.56 is ideally where it should top out and turn down. And then once it takes out the neckline, it's gone. It's never come, well, from a Gann perspective, that would indicate it's probably going down here somewhere. So if you want to ignore the Gann charts, that's fine, but you can look at this and see, hey, that was a low, that was a high, that's a high, that's a high, that's a low. Hey, the Gann retracements are working pretty well, and the way we have the 1-by-1 down from high catching this high, and it caught lows here, the chances are when you take this one out, it's the same slope, it's another 1-by-1. Remember, all of these red lines are 1-by-1s. I've only put in the 1-by-1s. I didn't do the Gann fan because it clutters it. I think you can't see the forest from the trees. You get lost in the Gann lines. If it's simple, people understand what you're talking about. And this one down from high is descending at a rate of 0.5 points per month. It's the same slope as this line. So there's a lot of geometry to the Gann charts. And the markets there is some common sense to the markets. It's not a random walk. That's what I'm trying to say. If you look at the line down, if it gave you a high here, chances are this line will give you support. And it did. But when you break it, you're in real trouble. You're going down here somewhere. So that's what I'm saying. I really don't like it. I think you should be selling the rallies. If you believe in the Gann charts, you can argue differently. But this is what the Gann charts would say. Now, if you're looking at coffee, here's a quick overview. From this low to this high is the initial swing. Remember, we said equal increments. Now, if you were to double that and project forward twice that swing, that would take you to 317.85 on the coffee futures. We're looking at the September contract. So if this thing were to double in price, then it would go up here somewhere, 317 area. If it only went half the distance of that initial swing, it would go to 286. So these are just projected targets for the high some point in the future. And if it were a 91, let's say it's 90 days, as this was 90 days from low to higher low, then maybe we do 90 days into high. You know, if there's symmetry to this market. So that's the big thing with Gann. We're always looking for symmetry. We're looking for the potential of a market to repeat a similar pattern. And if it went 90 days in low to low, it might now go 90 days low to high. Or if you like, maybe it does a half cycle and only does 45. So maybe it goes down here somewhere, you know, into, if it's a vertical move up and it gets too overbought, you might consider the fact that, hey, instead of doing 90 days, maybe it'll do 45 into high and then sell off into another 45, forming another higher low. So it would go low to higher low and then go up. So that's also possible. I think with what really annoys people is they want to know exactly what it's going to do in the future. That's not how Gann works. Now, the common sense argument is that, hey, when it's going up, if it's overbought on the momentum indicators and you're up here somewhere by, say, September 19th, then, you know, that's pretty close to the fall equinox. It's the 22nd this year. So, hey, that would be a time to sell. And then it would probably fall back a little bit before it goes higher again, completing a 90-day cycle over here in November. Maybe that's what happens. You know, and the cycles, you know, you think you got it figured out, and they can always surprise you. So you have to keep an open mind. What I try to do is I look for clusters where you got a bunch of cycles calling for a turn, and if it sells off into that, hey, that's probably a low. You still can be proven wrong. I mean, this thing could have kept going down, but then you would know, hey, you took out the 1x2 line, maybe I'm wrong, it's going to keep going down. But when it bounced off of it and then it took out the 1x1 and it came up here, found support on it and took off again, hey, we know we're in business. We know coffee's going to keep going higher. So I hope this is, you know, helping you out in terms of understanding Gann a little bit better. These are not the only tools you would use for Gann. They're just a couple of simple tools that will help you. And, you know, if you like this sort of analysis and you want to see this on a range of markets, stocks, bonds, forex, commodities, crypto, whatever you like, we do all of those markets. So think about a 3-month trial subscription. I think you'll find it worth your money, because this thing with coffee, it's just one of many markets that I believe it's in a bull market. It's going to keep going. So that means you want to buy the dips. You don't want to sell the rallies. And it also, going back to Starbucks, It means this is a freaking nightmare for Starbucks because their cost of production, the main input is coffee. What are you going to do when coffee prices double? Are you going to raise coffee to like $10 a cup? I don't think so. I think you're going to lose business. People will just say, well, I'll just make it at home. I can't afford to be buying coffee at $10 a cup. So that's the problem that the new CEO has. Good luck. I hope he turns it around, but I really don't think he will because I see this resistance on the Gann charts. And if you look at this chart here, actually, you know where we're at it. Look at this. You want to see something blow your mind? If you do a copy this line, the same slope, it comes out to the same area as the Gann line that we just showed you. So we're at resistance right in this area. Beyond, if you were just drawing a trend line and copying it, or if you're doing a Gann line. So the reason I like Gann is because we know the slope of the line. We've actually defined it intelligently and we can repeat it. The price unit or the slope of the line is 0.5 points per month. We know what that is. The slope of a trend line, the difference is you don't know what the slope is because they just draw the line connecting one high to the next. They don't think about the price unit. They don't think, well, what is the actual slope of that line? What is the relationship between time and price? With Gann, you know that relationship because you've defined it. You've defined it every time you do a Gann line. We know that this is going to move up at a rate of 0.5 points per month. That's what we know. And it helps because if you have a spatial awareness of time and price, you're way ahead of most other chartists. So I hope this has been helpful. I know I talked a little too long, but hey, if you're really into Gann, I think you spent the whole time watching this.